Right. Good morning, everybody. Ooh, slow morning in here. Not a lot of chatter. That's okay. Hope everybody's doing well. It is 9 a.m. on the 12th day of April. What is today? Today's Wednesday, isn't it? Man, I love a good Wednesday. Middle of the week. Here we go. Good morning, Bobby T, Sophia, Joel. It's great to see you guys. Glad to have you here. Let's do what we always do. What do you say? We're going to go watching JN trade. Gary, don't do that. Good morning, Marcotti 13. He's fun to watch trade, isn't he? Guys, have you ever... Oh, what's a good analogy? I stink at analogies, right? Um, Watching John Novak trade is awesome. It's like going and watching somebody that's at the top of their form perform, whether it's sports or acting or whatever. But you have to realize that just because John Novak can do it, don't try to trade like John Novak. John Novak sees things on a chart that you won't see for the next 10 years. He'll see advantages, he'll see disadvantages, he'll recognize bar patterns, trigger locations. All these things become second nature to him because of the time and repetition that he spent with the software. Heck, he created the software. So when you watch John Novak trade, when you see other people in the room trade, make sure that appreciate what they're doing, go through, but make sure you understand it. Don't try to replicate it until you have the time to replicate it. Build from a foundation, and guys, everybody's going to get there. Everybody will get there without a doubt. And we'll talk about some of the things that he sees, and I'll go through his charts, and we'll look at exactly what he sees. And we'll talk it out. But remember that it's got to be your plan. It's got to be your checklist. It's got to be your trading plan. It has to be your trade. Before we do anything, guys, we're going to take a look at news, right? Today is Wednesday, April the 12th. There was some market moving, high impact news at 8:30 a.m. I hope that you had your S&P up. I hope that you had your S&P up so you could see just how violent the market can react to this high impact news. It's not necessarily the news that we're worried about, it's the reaction from the news. And we don't really care what they say. We're really only worried about the fact that it's there and it keeps us out of that emotional response. So every morning I go through, I'm looking for high impact, I'm looking for medium impact. Crude moved as well. I look for news in the morning, and at 8:25, I get up and I walk to the kitchen, and I pour a second cup of coffee, and I start making breakfast. I don't even sit in front of my computer. I rarely watch it anymore because I know I don't trade it. Um, and Gary, you saw the second trade but couldn't pull the trigger fast enough. And you will be able to eventually, right? Keep working those repetitions. Guys, when you have an unwavering conviction on what it's going to take to get you into a trade, you won't hesitate. You'll see that trade. You'll be running if then in your head long before that trade ever happens. And that's the goal of this classroom, really, is to get you to a point to where you can look at your chart. I'm going to go to the tutorial section. You can look at your chart and in an instant, because of the study you've done, because of the rules you understand, because of the advantages that you seek, you'll be able to look at your chart and you'll be an amazing chart reader. You'll understand where the market is likely to continue. You'll understand where the market is likely to go, and you'll also understand where the market is likely to stop. And you're going to use these three key elements, this continuation point for an entry, these likely to go are going to help you with profit targets, and then where it's likely to stop is going to keep you from trading into areas where the market is likely to react to that Fibonacci. Whether it's a reversal or create a big bounce, you're going to give yourself this clear path. And that's pretty much the premise for the whole classroom, guys, is we're going to focus on one trade in the beginning. We're going to focus on a high probability trend trade. And we're not focusing on this because it's the only trade you'll ever take. Guys, in fact, you're going to break away from this trade sooner than you think. But if you spend just a little bit of time focused on these advantages, momentum, a clear path in an entry area, These advantages that come from 3 simple rules, easy to identify. It'll take you a week maybe to put them together to understand the entry for the trade, and keeping it simple, only on 2 charts. There's a lot of talk about adding charts, and guys, I love adding charts. I trade with more than 2 charts, but I've also got 2.5 years, and I've got about 10,000 pictures. And I ask questions all the time. I'm in a constant state of learning. So each and every day, my goal is to get a little bit better. But it came from this foundation. When you see John Novak trade, it came from this foundation. It came from understanding how to use a large chart to determine the trend of the market, the momentum of the market, whether or not there's something in your way that could create a problem, and then refining that large chart on a smaller, faster chart, looking for your entries on the 5-1. And that's exactly what we're going to do with the high probability trend trade, guys. Each rule provides a very distinct advantage. Those advantages, when put together, create a trade. And guys, they're creating a high probability trade. And that high probability trade is defined when each and every indicator on your charts agrees for the trade. And Discord just booted me out. And I always think it's funny that you guys can hear me. It's like I'm talking from the closet right now. Let me open back up here. Almost there. 3 simple rules, 2 charts, giving very distinct advantages, focusing on a high probability trend trade, focusing on a trade where each indicator on every chart agrees for the trade, guys. You're going to have your strongest triggers and nothing in the way, nothing between you and your targets. This is your first 20 days. Your first 20 days with Nexgen, your first 20 days of getting consistent, your first 20 days, trading days, that's a month, right? It's a very small part of your time for a career that can let you leave your career. Focus on that high probability trend trade, and what it's going to do is it's going to teach you to be a chart reader, because 90% of what you do during the day is going to be reading your indicators. 10% of what you do is going to be trading. Trading the advantages that your chart reading provides. And then guys, by the end of the first month, and probably honestly by the end of the second week, good morning Thala, you're going to start branching out and you're going to start looking for these medium probability trades. And when we look at pictures in the classroom, what you're going to find is that the majority of them are medium probability trades. This will be the vast majority of your trades. And it's when most of your indicators line up for a trade, however a small issue exists. And when you execute medium probability trades, you're going to take them, you're going to manage assertively. And if there's trouble in your way, your chart reading allows you to identify it. You can get to a 0 loss level quickly. You can take quick profits. You can understand what's happening in the moment. And it all revolves around your chart reading. So for that first 30 days, focus on those 5-1 trend trades. Focus on that high probability, that absolute best of the best. It is going to turn you into a chart reader, and your chart reading is going to turn you into a successful trader. That's the goal, right? And that's what this class revolves around. Our first hour is spent talking about the rules for this high probability trend trade. It's spent talking about recognizing strong triggers, termination conditions, and then using a limit order at areas on your 5-1 inside of large triggers to get into the trade at the absolute best spot. So without further ado, let's talk about rule 1, guys, strong trigger lines. What you're going to find is that the majority of what you do each and every day when you're looking at your charts is you're reading trigger lines. Trigger lines give you an unbelievable amount of information. The first thing that they're going to do for you, your T3 trigger lines. Solid lines are your smaller, faster moving trigger lines. Dashed lines are your large trigger lines. They're a slower moving trigger line. These guys work together to give you a lot of information. The first thing that they're going to do is if the small trigger lines break above the large trigger lines, your background is going to paint green. That green background lets you know that you should only be looking for rules to be met for high probability trend trades. It's going to keep you on the right side of the trend. And I can tell you, if I go back and I look at my last 100 trades and I look at my losers, most of them are fighting the trend. Because yeah, I do it too sometimes. Sometimes I form opinions. Smalls go above the large, background's green. Guys, stay focused on those long trades, looking for the rules to be met. Smalls break below the large triggers, background paints red. We're in a downtrend. Focus on trading with the trend initially, and what that's going to do is it's going to keep you out of an awful lot of trouble. The second way to avoid trouble is make sure that you're taking trades when the trigger lines are their strongest. This is rule number one for a high probability trend trade. When the small triggers are crossed up, they're above the large triggers, which are also crossed up. Both triggers up and wide is the most favorable look for buying a pullback on that smaller, faster chart. Guys, this is what we call odds favorable momentum, because the odds are favorable for the market to continue in the direction of the trend when you have this momentum look. And John talked about the momentum phase of your trigger lines yesterday. When those bars are far away from the large triggers, this is your best of the best look. As those bars begin to return to the large triggers, the momentum is waning. And when the bars return to the triggers and the small triggers re-enter the large, guys, this is a weakening of the large triggers. When you weaken your large triggers, anything can happen up or down. I'm not sure about you, but if I'm going to put my hard-earned money on a trade and I'm looking to take a position in the market, I want to enter that market with odds favorable momentum. I want the odds favorable in my direction, and anything can happen, whether we don't know if it's going up or down. This creates problems, right? This creates a trade that doesn't have that advantage of momentum, and that's the first part of what we're looking for a high probability trend trade. So guys, I'm going to ask throughout the day, especially if you're brand new, is everybody okay with this concept? Strong trigger lines lead the way. We're trading with the trend. When we get that separation, that gap between the two, they're running parallel, guys, this is your best of the best look. This is what's going to get each and every trade going in the right direction for you and giving it the highest chance to continue in the direction of the trade. Once you have the momentum, the next part of the equation is a clear path. And it's really recognizing termination conditions, those areas where the market is likely to stop. The areas that we're going to look at, let me give you a picture here. I think visual helps a little bit when we're talking about all these pretty colors and lines. These are the areas on your chart, guys. This is your map to get you through Nexgen software. The areas that may reverse the trend, and once again, we're going to use those T3 trigger lines to form a comparison. It can be this magenta divergence high. This magenta divergence high prints when there's a loss of momentum in a move. So the market moves up and begins to move back down. If you see this magenta line, it means that momentum is not following price. We'll use the divergence low. Same concept, other direction. Momentum is not following price. And when price comes back to these areas, we're going to take a look and make a comparison and make sure that the market isn't likely to stop right at that key area. We're also going to use red Fibonacci resistance, blue Fibonacci support, these yellow 1-to-1 dots. And we may also use a midband. And we'll use that midband when the trigger lines don't follow the move. And we're going to find examples of that. It's called the gap theory. But know that your key areas are going to be resistance, support, 1-to-1s, and these divergence highs. And that's where our quest is going to start in order to give us the advantage of a clear path. And it's a two-part process. The first thing that happens is price reaches an area. Pretty simple. Price bars reach an area. In this case, these red price bars, price is moving down, triggers are moving down, everything's moving down, and it reaches Fibonacci support. When price reaches that Fibonacci support, check your trigger lines, and if they're not below the support, don't take any more trend trades into the area on the small charts. When price reaches an area and none of the trigger lines break through, it simply means that we've reached a termination condition. This may reverse the market. There may be a large reaction to the Fibonacci area. It's never guaranteed, but when this happens, you no longer have the advantage of a clear path. There's something in between you and your next target. So you'll also see it in long trades or long Price goes up, it reaches that Fibonacci resistance. All you have to do is ask yourself, where are the trigger lines? If all of the trigger lines remain below that area of resistance, resistance is likely to stop the market. It may create a reaction right at that key area. No more long trades into the area. And you can see that this resistance creates a reaction all the way down to support. When we reach support, you begin the same process of asking yourself, where are the trigger lines? All the trigger lines remain above support. I'm not looking for short trades into this area. This is where new users say, well, Mark, if I can't go long into resistance and I can't go short into support, the heck am I supposed to do? Well, 90% of what you do throughout the day is going to be reading your charts, waiting for advantages to be present, because 10% of what you do is going to be trading. When price comes back up to resistance, you can see that there's two forms of resistance as well as a divergence high, and the trigger lines don't make their way through the area. We're not looking for the longs here, but this termination condition, this pivot stop out, here's your pivot, here's where it stops it out and heads the other way. When price trades above divergence line, then back below, don't take any long trades. If Fibonacci resistance is there as well, this adds power to the top, guys. This is what we call a strong top. A termination condition that creates a full reversal is a strong top. And the other side of that coin, of course, is a termination condition that creates a full reversal from a low is a strong bottom. This is the premise for your highest probability trade. When this termination condition, price reaches 1-to-1s, absolutely no trigger lines break through, creates the full reversal, meaning that the smalls get to the other side of the large go from red to green, and then ultimately it gives me this odds favorable momentum and a clear path. Guys, this circle on the tail right here on the 13.2, this is your potential entry on the 5-1. This is your absolute best of the best, highest probability trade that you can take as a new user. This is your focus for the first 20 trading days, right? Focusing on the 5-1 trend trade that happens after a termination condition. That's where your highest chance of success comes in. And it's this look, this understanding, that's going to take you to that medium probability, right? It's going to take you to that trade where maybe a small issue exists, but you've already established that you can understand advantageous momentum. You're already capable of recognizing termination conditions when it's not clear to take that next trade. And we're ultimately going to get to the point where you can find that best of the best spot where the market is likely to continue, and you'll be able to make an educated decision on whether or not your medium probability trades are the right trades to take in the moment. This is my termination conditions summed up in one picture. On the left-hand side, absolutely no triggers break through that area of resistance, guys. The market has the potential to stop. We no longer have a clear path. Rule number 2 is not met. We're not looking for the trade. The rules say let the area break. Well, when the small and large get above that area of resistance, well, now the area is broken. Now you have a clear path. And guys, there's one of those tails again, one of those potential entries on a 5-1. And then we go to our medium probability. Guys, this is the first scenario that you're going to recognize as a new user where a small issue exists. And that's when your small triggers break through an area with that odds favorable momentum, but the large triggers haven't quite made it. This 69.80 area has the potential to break with that odds favorable momentum, but it's not a clear path yet. So guys, no triggers, no clear path. Both triggers, clear path. Smalls, but not the large. You have the potential to break this area with odds favorable momentum. Give me a Y in the room if you're with me, guys. These first two concepts happen on your 13.2 chart, and they provide you the advantage of momentum, and they also provide you the advantage of a clear path. I love to speak in advantages because if I'm giving myself these advantages, well, then I'm also taking them away should I make the decision to break my rules. And guys, trust me, you're going to learn when it's appropriate to maybe break your rules, but first you have to understand the basic concepts, that foundational approach. Sometimes the market seems to turn from nowhere. Sometimes it's got a clear path, it has weak triggers, and it just seems to turn from space. Same thing up top. You can even have odds favorable momentum, and the market just changes direction on you. This final termination condition is going to help you recognize this. This is not only going to be a termination condition to help keep you from entering a trade, this is also one of the most prominent looks that's going to help you manage a medium probability trade. And it's 3 divergences in the same price range may terminate the trend. And it becomes very powerful when your small triggers go from odds favorable to anything can happen. Notice that our first loss of momentum, the smalls are still outside of the large. We still have strength. But by that third momentum, our trigger lines have weakened, and we're now in that anything can happen state. And it becomes even more powerful still if there's a head and shoulders pattern. If that third pivot is higher than the previous from a low or lower than the previous from a high, it means that not only have we lost momentum 3 times, but we also are looking at a situation where price can't exceed the previous pivot. Now there's been some confusion on this, so I'm going to type it in the room. Actually, you know what? I'm not. 3 divergences on their own is a termination condition. 3 divergences with weak triggers is a more powerful termination condition. 3 divergences with weak triggers and that higher pivot is an even more powerful. They are 3 separate entities that begin with the 3, and then you can actually add strength to that termination condition as you recognize, once again, that trigger line reading or where those pivots fall from. You'll see looks like this at a low. You'll see looks like this at a high on the 5-1 when the situation happening on the 13-2 appears to be a market really changing direction without reaching that key area. So far, guys, we have the advantage of momentum, right? The best of the best, strongest look to hopefully get you to those next areas. We're going to give ourselves the advantage of a clear path, recognizing through simple comparison trigger lines versus areas. Guys, let's find that area where the market is likely to continue. This is the concept that I find most people get really good at by the end of the first week. And by the end of the second week, they try to do a little freestyle work. So let's find the best entries first. Because, and this is my coffee mug coming this year, great entries create manageable trades. I'm going to put that on a t-shirt and a coffee mug and maybe a mouse pad. Tony, you reloaded the charts last night, but you're having issue locating the tick replay. All you have to do, Tony, is right-click on your chart. And guys, this is what the classroom is for. Go to Data Series. And right there, under Data Series, your first box, it's the tiny little box below the new bar. We're going to talk about rules a lot, guys, but I'm also here to help you out with anything you have a question regarding Nexgen. Nothing is out of bounds or off base. You did that, but it isn't there. Can you show me a picture? And we may, and man, you know I hate to do this, Tony, if I don't have to. Guys, I'll do everything in my power to handle your tech stuff, but if I can't fix it, because I'm really not a tech guy. My brother makes fun of me because I'm so not a tech guy. Let's see what you got there, Tony. And you have your template is on there. Click on CL 0523. Do you need to highlight it in order to open up that option? No, okay, you don't. Tony, I hate to say it, but I'm gonna need you to go to tech. And here's probably a pretty good idea. And I see Cameron typing. He may have the answer. Control center to, thank you for that. Cool. Guys, it's a community here. I need this one too because I've never had that problem. Tony, stay in the class. Bobby's got a picture coming for you right now. And then Cameron said, go to your control center, tools, options, market data, and then show tick replay. And all you guys that are being helpful, thank you for that. We are a community, aren't we? Thala, are your rules on the chart? Awesome. Then we'll look at it. We're going to go over a couple, we're going to go over rules. And then after we go over these high probability trend trade rules, I'm going to start going through y'all's charts and taking a look at them. Thala, I know that you know how that works, but I'm going to make sure that my new people know that I'm never ignoring you guys when you post in the room. But I like to cover rules. So we have a point of comparison, right? We've got something to go up against. So during the live markets, this is going to be the look on your 5-1. When the 13-2 has its strongest triggers, when it has the clear path, your 5-1 and an uptrend is going to look just like this, guys. Bunch of up bars, all of these green bars, small triggers cranking outside of the large. The large are wide, they're angled in the direction of the trend. And you're going to focus your attention on these triggers, and you're going to focus your attention on the areas that may fall within them. Guys, high probability trend trades come from areas, and what you'll find is probably 99% of your trades will come from areas. And those areas can be fibs, mid-bands, or one-to-ones, those yellow one-to-ones. And the reason trades come from areas, guys, this is like throwing a tennis ball as hard as you can into this area, and the area gives it a place to bounce, right? It becomes a launching point, a bouncing point for this high probability trend trade, and you're going to be able to assess with accuracy, to pinpoint where the market is likely to continue by creating a window of opportunity. And that window of opportunity is going to be built after the reversal bar prints on your 5-1. And when that red bar happens, sorry, I had an important message coming in on the side there. When this red bar happens, guys, this red bar is a little pushback. This red bar is showing really the mentality of the smaller crowds. The larger crowds, I like this picture. It kind of sums up why we use two charts. The larger crowds have given you momentum, the 13-2, right? The larger crowds have told you that there's nothing in the way. There's no key areas for them to react to. Over here on the side, guys, there's this little group of yahoos that want to fight everything. These are the guys that play chicken with semis. Everything says up, everything has momentum, and these guys want the market to go down. Thank goodness for those guys, because these are the guys that are going to get you to your entry. These are the guys that are going to help you identify your window of opportunity. And when that reversal bar prints, you're going to look for your highest point of support inside of favorable large triggers. You're going to look for your lowest point of support inside of favorable large triggers. And guys, that's where you're going to define your window. Favorable large triggers means that both the large and the synthetic are overlapping. They're working together. They're creating this amazing channel of strength to the upside. And the tighter they are one on top of the other, the smaller your window of opportunity becomes. The less risk you have on a trade, the more opportunity you have coming from one specific area. So when I'm creating a window of opportunity, I'm going from that highest point, mid-band, all the way down to the one-to-ones. But because of the momentum and the clear path on the 13-2, you're going to right-click right at the top of that window. and you're going to activate a limit order, and then it's out of your hands. You don't control the market, right? It's either going to come back to your window or it's not. And let me take a picture of the picture to show you exactly how I create the window and the easiest way for you to do it. I'll take a drawing tool and I'll go from the very top of my trigger lines to the very bottom of my trigger lines. But my window comes from the highest point of support inside of favorable large triggers to the lowest point of support, which means that my window is only from this midband to these 1-to-1s, and this becomes the area where the market is likely to continue. With the advantage of momentum, with nothing in the way, and now you've pinpointed where that bounce should happen. Your initial stop will go down here below the window. It's typically 12 to 14 ticks in futures trading. But because of the advantages present, you're in a long position at 79.21. Each of those advantages have come together. Where is our rules? Here we go. The advantage of momentum, the advantage of a clear path, and now the advantage of an entry area. Guys, this is your best of the best, highest probability. Everything in your favor. All charts agree, trend trade. And typically 70 to 80% of the time, this is what it looks like, guys. Profit target reached. Your job for the first 20 days is to nail this entry. That's it. Great entries create manageable trades. Once this reversal bar forms, the market begins to move in the direction of your trend. You can reduce your risk below that reversal bar. Because you wait for the pullback all the way to support, all the way to that window of opportunity, your risk is ultimately reduced. But more importantly, your profit potential grows exponentially by waiting for that great entry. So guys, I'm going to ask you, is everybody comfortable with what we're talking about right now? Odds favorable, no terminations. Let's look at this one that happened earlier. I'm going to put a little circle right on that tail. And guys, this is only for entry purposes. Only for entry purposes. Because we're trading into a blue line, right? And look at the reaction from the blue line. But what I want you to see is straight from that blue line, it pulls back to resistance inside of favorable large triggers. And then your trigger line reading, higher divergence, triggers inside, pushes that market up higher. What you're going to notice here, guys, is that it pushes it higher right to an area of resistance inside of favorable large triggers. So that's the pattern and that's the look. And if you scroll back and you just circle, this is your study tool, guys. If you scroll back and you look for odds favorable and no termination conditions, do you see how that market pulls directly back to an area of support inside of favorable large triggers? As this is your best of the best look. This is the look that's going to keep you on the right side of the trend. This is the look that's going to keep you focused on momentum. This is the look that's going to make sure that there's nothing in the way. And this is the look that's going to get you into the market at the absolute best of the best spot. Your job as a brand new user is to scroll back and circle those tails and make sure that the rules are met. You can make sure that the rules are met, and you can use this high probability trend trade checklist, guys. I've created a checklist, and what it does is it holds you accountable for following the rules. This gives you something to print out to put on your desktop, and every time you're taking a trade, making sure that you're focused on giving yourself the best advantages, right? So Marcati, sorry. Maybe it's just Mark. As you're getting there, this is a great way for you to focus on the best of the best. And there's two ways to annotate a chart, guys. When you have a trade like this, if you're using Snagit, drop your checklist right on it, and you can compare. But what I really think is advantageous for new users is take a minute and type it out. And don't just type out rule number 1. Type out strong triggers. Draw an arrow. Make sure that you understand exactly what it is you're looking for. Type out no termination conditions. And then at your entry, type out mid-band inside of favorable large triggers. Now I ask you, is there any doubt in your mind, any doubt at all, that this was a high probability trend trade? You know you had strong triggers, you know there were no termination conditions, and you absolutely, without hesitation, knew that that market pulled directly back to a mid-band inside of favorable large triggers. 100%, right? Does anybody not see it? Because this is your first 20 days, guys, identifying the absolute best of the best and never missing that rock star entry. Because great entries create manageable trades. Your job as a new user is to take that picture when you see it, and you're going to do two things with it. The first thing you're going to do is you're going to post it in the class, and you're going to say, hey, Mark, this was my read. Did I do it right? Smalls are outside of the large, and there was nothing in the way, and this is where I was going to get in. And we'll have a conversation. I'll either say, yes, absolutely, what a great entry. Or I'll say, hey, I wanted you to notice that we were trading into a termination condition, so you forfeited the advantage of a clear path. But let's talk about the advantages that were in place when you did that, and maybe this will help you work your way into one of those medium probability trades, identifying that small issue. The second thing you're going to do, guys, is you're going to take that picture of a rules met trade, and you're going to put it into your favorite looks. Everybody has this spreadsheet. It's given to you by Nexgen when you download software. And I'm going to identify it, perfect high probability trend trade long, and I'm going to be able to go back and study this look and make sure that what I'm doing fits the rules, because I'm not going to practice the wrong trades. I'm not going to build that muscle memory, because there's a two-part process to becoming successful, guys, and this class focuses on it heavily. The first thing is post your pictures in the room. Every trade you take, every time you get into the market, post a picture, annotate your chart, tell me why you did what you did, and we'll read indicators together. We'll be chart readers together. We'll have that conversation and make sure that you're seeing things correctly. The second is posting your trades into that spreadsheet, guys, and that's a two-part process. Everything you do. So, for example, Matt just posted a picture in the room. I'm going to use you an example, Matt. And Matt says the market has a good bottom. The 13.2 triggers are favorable. Some termination conditions, but there is room for entry inside of the large triggers. But they're going horizontal. So, Matt, what you're looking at here isn't a high probability trend trade, right? And that's okay. And the conversation that we'll have when Matt posts in the room is you have an amazing termination condition, and then you have a retest of that termination condition. But the 13.2 triggers are both angled down, so we don't have odds favorable momentum. We're coming off a termination condition that reversed the market. And more importantly, you're taking an entry and everything says down, right? Your triggers are down, your large are down, your synthetic are down. What you're doing here, and Matt, I actually love this trade, is you're using a chart read of a termination condition and then a retest where your trigger lines have told you without question that 55.82 is likely to hold. You stayed out of the bouncing nonsense, and then when the market comes back through and retests the area, you look for an opportunity to go long. And this isn't a high probability trend trade, but what it is it's an amazing read of a termination condition. It's not hoping that the support holds on the first hit when everything says down. It's letting your 13.2 tell you that it's likely to hold, and then looking for an entry opportunity over here. And Matt, the thing that you may not have noticed is what you have here with this look on the 13-2 is a pivot stop out on your 5-1. And this creates a pretty solid entry. And then if you're reading your MACDs, and Matt, this is pretty cool. Here you have a little bit of a lower low, but do you notice how you have a higher high? Your MACDs are going up, your price is going down. A lot of experienced users use this and say, well, now I have a divergence. What's amazing is it's written in the software. These MACD BBs are behind the scenes, and that's what these divergence lines tell you. They help you identify those divergence without having to do the math. But if you're accustomed to the math, there are still a lot of users that use it. I think it's a beautiful trade, Matt, and if we looked at it with an 8-range chart, you'd probably see a high volume area somewhere right in here, helping you confirm. Great trade. But guys, that's what we do each and every day. Take a picture, post it in the room, drop it in the spreadsheet, get that feedback, and it's okay to go back and re-annotate your chart. Absolutely. And we'll do this every time, Matt. And is that what you were thinking? Because sometimes I'll say something that you weren't thinking. Matt will say, holy crap, I didn't even realize that that was a pivot stop out at support with every trigger line above it, giving me my best highest probability entry here at the termination condition. So it becomes a great opportunity each and every time you post a trade. And guys, winners are fun to post, aren't they? Feels good to post a winner in the room. It's more advantageous as a new user. Share your losers. And let's talk about how to fix it, right? And when you use the spreadsheet, Matt's going to put his trade in the spreadsheet right here. And he's going to label it, we'll call it winner, termination condition, best entry, or something like that, right? And he can come back and study it, and he can repeat it. And if you're anything like I was in the beginning, guys, a lot of your pictures are going to say termination condition, loser, right? And I'm going to recognize this pattern of myself. Damn it, every time I trade into a termination condition, I tend to lose the trade. I can recognize a pattern in myself. Stephen F., your best bet is go over to Traders Chat and ask that exact same question. That's where everybody really experienced with Rhythmic is. You'll probably get a much faster answer over there. I'm not sure. I could open up my Rhythmic and go and do the exact same search that you would have to do, but I guarantee there's someone in that room that knows exactly how to do it instantly. Sorry, that's probably not the answer that you wanted. Guys, you can always everything about Rhythmic. We all have a grill with leftover parts, right? Men hate instructions. I know I do. So guys, post your trades in class, everything, the good, the bad, and the ugly. Track it in a performance sheet. We're going to recognize patterns in the market to make you successful. You're also going to recognize patterns in yourself to keep pushing you in the direction. Learn the rules for when it's okay to trade. Guys, that's my job, is to help you have an understanding of the rule, to create that foundation, right? I'm going to give you that basis. I'm going to double check your work. I'm going to make sure that you understand strong triggers, that you understand termination conditions. I'm going to help you nail your entries at the best of the best spots. Your job is to simulate your trades daily, to practice and to post those pictures in class until you have the correct rules. And don't practice the wrong trades. Because what you're going to do is, if you win the wrong trade, you're going to have a short-term victory, but you're really practicing long-term failure. It has to be repeatable. There has to be a reason for what you're doing beyond that gut feeling. Keep it simple initially. Focus on the best and then branch out from that. Get that foundation laid. Walk and crawl, or crawl and walk, let's say it in that order. And then eventually, when you learn to read your indicators, when you've committed a week or two, this clarity comes, And as you focus on your high probability checklist entry, you're going to begin to see all the other things around you. You can use replay data, go back, retrade the day, fix your mistakes, skip the trades you shouldn't have taken, take the trades that you were supposed to take. And what you're going to do is you're going to take pictures of the correct trades, guys. And every time you have a rules-based entry, that high probability entry, you're building a database in your spreadsheet. Guys, this is my spreadsheet. That's 142 pictures of high probability trend trades rules met entries. And it's also got some of those 50-50, those first medium probability trades in there as well. 142 examples. The more pictures you take, the easier it becomes, guys. The recommendation, this is the only place I'll make a recommendation. I won't recommend for your trading. Take 15 pictures a day, guys. Annotate them thoroughly. 15 pictures a day is 300 pictures a month. By the end of a 90-day study, you're at almost 1,000 pictures. I typically take 10 to 15 pictures before the market ever opens. I take pictures before I enter a trade. I take pictures during the trade. I take pictures after the trade. And I study each picture. If it's a loser, I'm looking for the reasons why it's a loser. If it's a winner, I'm looking for the reasons why it's a winner. And guys, you have access to the classroom, right? Everything you do, you can post. I do the same thing, but I drive my poor brother nuts. For those of you that don't know, John Novak is my older brother, the CEO, and he made the mistake of opening up the Skype portal to me. And we talk about every look in the market for 2 to 3 hours before we ever get to this class, looking for ways to make your life easier. Guys, repeat this process every day until you always take the correct trades. And then once you guarantee yourself you can win, that's when it's time to go live. This is your path to being comfortable, to being confident, to giving yourself the best chance of success. Take a lot of pictures, right? There was that long trade. That was a good one. Let's see what the market's doing now. Guys, they are selling it off something fierce, aren't they? This sure feels like odds favorable momentum and no termination conditions. Missed that mid-band by a couple ticks. Was anyone able to take advantage of this one? Because that's a heck of a good trade. And now we've just made it to Fibonacci support. I have anything can happen triggers. It's a great place for the market to slow down to take a bounce. Are there any questions about the high probability trend trade, guys? Is there anything you'd like a little clarity on? Because if there is, this is a great time to ask. Otherwise, I'm going to start clicking on your pictures and see what you guys are doing. Joel F. got us started off today. Slow loading picture. Joel, I'm not getting a picture out of that one. Let me try it again. There it is. All right, guys, so we're going to take a look and we're going to see what Joel did. Joel uses a checklist every time he takes a trade to make sure that the advantages are present. I love seeing you guys doing this, being serious about your success. He said that he had a good bottom. He said that he had odds favorable momentum, that there were no termination conditions in an area for entry inside of favorable large triggers. Right here, Joel says, whoa, wait a minute. That's right into resistance. I'm not taking that trade. Joel, great restraint, right? And then everything starts to clear. You take the entry right at the area of support. You let it stop you out low tick inside of those triggers. And it goes up in the lower divergence. And guys, if I'm not mistaken, this next picture, Safia's done the same thing, the exact same trade, guys. Great entry, creates a manageable trade, right? Dun, dun, dun. There's the entry on the 13.2. Nope, this is a different trade. There's the entry on the 13.2. Everything says up. You take the entry. Lower divergence with the triggers inside takes you out. I like it. Sophia, so I think that this is a good looking entry, right? It's a solid attempt. And I know that you're learning to read your 8 range chart right now. So let's do the 8 range lesson. Actually, we're going to do this twofold. Joel, are you still with me in here? I took a picture of that same trade that you took. And guys, it goes into trigger reading. Joel, your entry was a good one. It was right over here. I like it. You didn't give it room to run, right? You had strong triggers, everything set up, strong triggers. You just didn't give it enough room. Waiting for the pullback a little bit closer to the areas might have helped with that. And then it creates a management opportunity for you guys. Remember that the small chart can show change. Joel, I love everything about your trade. I think that it was a great trade. It was a good read. Everything was in order. Your best trade was the one that happened, well, that was almost 2 hours previous. That market was moving slow. You may not have been in front of the computer. This is a great entry. You have strong triggers. There's that small window, those areas. That initial stop has to hang just a little bit, right? And then there's your management opportunity to get out. I was looking at this one. This is one of the conversations that John and I had this morning as we went through. And then, Safia, are you with me? You will, Joel. It was a great trade. Getting in at those areas always makes it easier. Guys, odds favorable, no termination conditions, absolutely nothing in the way. There's a great looking entry. I like it. There's a lower divergence, and it pushes down. One of the one of the great things that you can do, being a rules-based trader, Thala, I promise you're in order. I have to get the people before you. Safia, great look, right? Odds favorable, no terminations, pull back to the area of support. You nailed your entry 100%, right? I love everything about this. So you were talking about learning to read the 8 range. Things that I see on the 8 range that help in this trade quite a bit. Do you see how we're already extended beyond those outer bands? That's the first thing that I notice. The market's already pushed to an extreme. This was one of John Novak's lessons yesterday. You also have divergence coming from that same extreme, meaning that we're losing momentum. Oh yeah, yesterday afternoon he had a good lesson. And then Safia, Monday morning, he's going to take this class as well. And here's the lesson that he did in class. Here's a picture you guys can have, and it's annotated from John Novak as well, which is pretty cool. Divergence at an outer band on the 8 range suggests that this market's really extended. And that's exactly what you had, Safia. And this is the best picture ever for learning to read, right? And as the market pushes down, you're coming back through, and this high volume area prints. And do you notice on your 8 range you were extended? You had divergence, and now you're on the wrong side of those trigger lines. Some pretty good information there, and this comes with practice. And it's funny because John Novak and I were having the exact same conversation. When you were taking the long trade, we were using this 8 range and saying because of the extension, and do you see at the very top that green dot? That's what we call a stranded buyer. That means that not only did it not continue up, but the buyers were trying as hard as they could. And we're going to turn this into a little bit of a market flow reading. That stranded buyer. Let me find my market flow. that's not the right one. There it is. All right, this one talks about stranded buyers and sellers. When you get one of those reversal bars, one of those antenna bars, so from a low, if there's a pink dot at the bottom, it means that the sellers pushed as hard as they could, but the buyers won. And when you're at an extreme like you are outside of the outer bands, and when you are at that extreme and divergence comes and you get stranded sellers or buyers, what it does is it opens up an opportunity for you to say, okay, I'm losing some momentum here. I'm looking for a stranded buyer. I'm losing momentum here, and because I'm losing momentum here, well, I can wait for a market flow signal. And you did get one. It allows you to reduce risk, and then that lower divergence really takes you out. But because of the stranded buyer, whoops, make it easier. Because of the stranded buyer, because we're back to the wrong side of things, because we're outside of that outer band, this kind of helps you identify a turning point in the market. So the trade that you took, I think was perfect. I think the execution was 100% spot on. And I think the lower divergence told you to get out. But now this is one more layer that you can add to it, recognizing these extremes. No, the second one was a revenge trade. That was you saying, to hell with you, market, I really want it to go up. Believe me, I identify with that trade. I've done it. But do you notice how the rules weren't met on the second trade? Not at all, right? The triggers had weakened, you're below everything. This is nothing more than you being pissed off that this one didn't work, because that one was a good look. This is the one that kills P&L. When you take a loser on a good trade, it happens. You're going to lose great trades, guys. Anything that wins 70% of the time is going to lose 30% of the time. And that's exactly what you're doing, is you're fighting mistakes, and those mistakes take away from the great trades. This is a great picture with a ton of information. Yeah, you're fighting. Well, it was still an uptrend, but you didn't have any areas inside of favorable large triggers, right? Everything was below. Everything was coming down. You just formed an opinion in the middle of space. But this is where you can start. So Safia, as you learn to read the 8 range, and guys, this is for everybody learning to read the 8 range. When you see the market turn, what did it look like? Did you get one of those bars with divergence? Did you get a stranded buyer? Did you get a stranded seller? And that's how you begin to recognize the 8 range and how to read it and add it to what you're doing. Great picture, Safia. Thank you for that. And I hope that creates a little clarity for you on it. All right, Jonathan. Everything says down. Absolutely nothing in the way. So you go short and get paid at support. Do you see how easy it can be, guys? Everything says down. He's trading with trend. He's trading with momentum. He's trading with everything. Absolutely nothing says this market isn't going to continue in the direction, and sure enough, it goes all the way to Fibonacci support. Jonathan, beautiful trade. Way to take advantages. Thala. All right, Thala, let's take a look. Termination condition creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum has no termination conditions. Yeah, Ron, he can send you a nickel. He might have been doing that before you. No termination conditions has you look to the 5-1. The 5-1 has an area of support inside of favorable large triggers. What do you think, Thala? You feel good about this trade? Was it rules-based? Do your rules win more than they lose? Great trade. I would have taken it too. You had every advantage. You had the advantage of a termination condition, creating a full reversal. You had the advantage of odds favorable momentum. You had the advantage of no termination conditions. And you had the advantage of an area inside of favorable large triggers. Sometimes these trades don't work, Thala. But let me show you the cool thing on the other side. Did the market ultimately continue up from here? All right, so Thala, here's the next lesson for you and for everybody. You did. Watch this. Thala, beautiful entry. And then those yahoos create shenanigans and it stops you out, right? And you're like, son of a gun, but everything's right. Do you see where the market stabs back to that mid-band and the small triggers and everything going? When it's still great over here, that's your second entry. That's your continuation trade. I took one yesterday. Strong triggers, everything's up, coming from a termination condition. I take the entry. I took my quick profits, divergence prints, and I exit. Guys, I made $110 on this one. Blah. And then the market does all this nonsense here. And then check it out. Looks just like yours, right? Now every trigger line agrees for up again on my smaller, faster chart. And guys, I entered at the low tick on the pullback to the small triggers right at the mid-band. It was actually such a sketchy entry. It was a great entry. But only one of my contracts was able to get filled. And then it did exactly what it said it was going to do. So Thala, this is what we call the continuation style entry. And I've got a picture for it because you know I have pictures for everything. There's going to be times when that absolutely perfect trade doesn't work. Keep your head in the game, right? When that perfect trend trade doesn't work and nothing changes except some jackass with a bunch of money pushes it lower, perfect entry, doesn't work. Look at the second entry. It's almost always the same price or close to the same price. Perfect entry, pushes lower. If you got stopped out, perfect entry. Doesn't this look almost exactly like the one that you just took? So guys, this is a great learning opportunity for you. You called it perfectly, Thala. Everything about that trade was amazing. You had every advantage in place. Now the second step as you begin to progress is learning how to catch that next one. And guys, that's one of the things that I feel so fortunate about in this room. Yeah, it feels good to hear. When you take the right trade, when you follow your rules, when you execute flawlessly, and it doesn't work, human nature instantly has you saying to yourself, man, what did I do wrong? Where did I screw up? What rule did I break? Thala, you did it perfect. It just didn't work. The more trust you develop, guys, the more you're comfortable with the rules being met, the easier this is. You're like, I don't care if it works or not. It's going to work more than it doesn't. But it's that trust in the rules that keeps your head in the game and gets you to that next entry. All right, Bobby T. Oh, there was sharing that picture. Thank you for that. Gary. All right. Hey, Matt. You remember this one? Termination. Retest of the area. Pivot stop out. There's that high volume area I was talking about. I said I bet you if we looked at an 8 range, you'd see it. See how you get that pivot stop out, 3 divergences in the same place, price begins to break above. Right there, there's that little stab back, and it comes right there. That's your best entry, Matt. Yours was good, but still on the wrong side of things. You had a great opportunity. If you are going to be an edge trader, getting to the right side of those trigger lines, and do you see how it stabs back? Right to those small triggers. The large triggers go green. We've just had a pivot stop out. That's your rock star entry with virtually no risk to get that market to move up. You nailed it right here, and then it gave you a second chance if you missed it. The rules for a high volume area trade are not met 100%. Gary recognized that. But as you grow with the software, as you understand the looks, as you recognize the patterns, you're going to find opportunities outside of those basic trades that we teach, guys. All I'm doing is helping you lay a foundation. You're going to do great things from that foundation with just a little bit of study. Jonathan, I don't even have to look. I bet you it's with momentum. I bet you it's with nothing in the way. And I bet you he got paid at Fibonacci support. Jonathan, beautiful. Jonathan even said, you know what? This thing's cranking down. I'm going to go a tick or two below the area of resistance. Jonathan, you are absolutely putting on a clinic today. Nice trading. All right, Dave, let's see what you did. Dave embracing that momentum. I love it. Ron C., I believe, is starting a cult. Don't drink the Kool-Aid, Dave. But doesn't everything, look at this. There's momentum. There's absolutely nothing in the way. He waits for trouble to clear. He gets in. He gets out. Right at a red line. That's 11 ticks. That's a $220 trade over a matter of seconds with all the advantages in place. Dave, great job. Guys, I get excited watching you take your chart reading and turning it into a trading plan that suits your style. And then Thala, let's see what you did. Termination creates a reversal. Oh, it got wonky on you, didn't it? Is the market coming from a good bottom? It is. Did you have odds favorable momentum, Thala? So let's talk about truth in advertising. I'm a big fan of the checklist, guys, but the checklist only works if you're honest with yourself, right? And this is never me beating you guys up. And if it ever feels like I'm beating you up, I don't know. Work through it, right? Good bottom, though. That's a yes. I'm going to use your spreadsheet. Odds favorable momentum. The smalls are down. The large are up and flat. Can I check no on that one? Can we annotate? You can't see my screen? Guys, can everybody see my screen? Or is it just Thala that can't? Uh-oh. All right, hold on. I'm going to see if I can get it back up. That means Discord's probably about to boot me out. All right, I just rebooted. Can you guys see it now? All good? Tank Thala. Okay, cool. Market coming from a good top or bottom. I'll start at the beginning. Absolutely. I love it, Thala. That's a yes. Odds favorable momentum. The smalls are down. The large are flat, but they are up, right? These don't agree. And guys, I'll go back. So Thala, this is odds favorable momentum to the upside. And Thala, you know this. But the lesson today is if you're going to use a checklist, be honest with yourself. You didn't have odds favorable momentum, right? And then Thala, you reached a mid-band and your large trigger stayed a full bar away. So let's go to our lesson on the gap theory. Because when I look at termination conditions, if the large triggers are a full bar away, do you guys remember this one? If price accelerates away from the large triggers, full bar, no worries. And Thala, this is one of the most overthought and under-realized concepts in what we do. It takes a second on this one. You thought that since the smalls were away from the large, right? No, I totally get that. But remember that it really is dependent. They're both in the same direction, right? The small triggers are crossed up and the large triggers are crossed up. So, yeah, perfect. One of the reasons that we post in class, right? A little bit of clarity. So you also got caught because the large triggers were a full bar away. This midband is acting as a termination condition. So that's a no as well. And then area for entry inside of favorable large triggers. Let's make this a little smaller so it makes yours a little bigger. So here is the top of your triggers to the bottom of the triggers, right? Check this out, Thala. The triggers are split. So there's my large triggers, and there's my synthetics. Is there an area inside of either of those? Not at all, right? And guys, this is one of the biggest reasons that this checklist can make or break you. Thala, what you saw was a great termination condition at a green uptrend, and you were hoping to take advantage of that, right? I agree 100%, and it's a good read. It really is. But what happened is it snapped back to the large triggers, and that happened right here. There's your snap back to the large triggers. But at this time, because they're split, and look at the momentum coming against you, look at the momentum coming against you, it's just telling you, man, hold on for a second. Let's give it just a minute and let these silly guys sort it out. They come back and retest. And then from the retest, everything starts going up. And do you see how it's starting to tighten up here? The smalls are rolling. You don't. Your rules aren't met, Thala. How easy is that? But let's go to the next step. Right here, isn't everything starting to agree? Smalls are up, large are up, termination condition held, synthetics are up. They're laying right on top of those large triggers. Everything's coming up. Go find this picture for me if you don't mind. Let's see if there was a stab back to 2018. I don't have gold up. Will you do that for me at 9:48? Let's see if the market gave a potential entry. And let's see if patience would have paid dividends. Great picture, Thala. So much great lessons in there, and I really do appreciate those. But I think the biggest thing is when you're using that checklist, guys, make sure that you're really using it. Don't phone it in. Great picture. And then Bobby T. Everything says down, right? Smalls below the large are flat, but we're coming from a termination condition. You take the pullback without divergence. This is more of a momentum style, right, Bobby? Termination, you're below everything. Triggers are strong. Not really an area inside of favorable large triggers, but that's your best spot for a bounce. And it lines up right with the pullback to the large. And then market flow confirms. I like the trade, Bobby. Good heads up trading. Great chart read. And then when you take that momentum style entry, a loss of momentum pulls you out. Perfect execution. Quick profits. No reason to sit and hope, right? Because it wasn't high probability. It was momentum based. And there's your loss of momentum. Love everything about it. And then Thala, gold again. Odds favorable, no termination. Your entry was down here, right? You're in at 21. I can't see the number behind it. Your entry was at 20.8. Yeah, you were definitely late. It increased risk. And then you hit resistance, and your trigger lines weren't anywhere near it. 23.5, you get out at 22.8. I like it. I would have had a profit target sitting just below that fib. Rock star. And that's a 10 lot. So you take 10 out up there, 27, 28. I love it. I think that's great. I think you saw an area likely to stop the market and took profits. You recognized where the market was likely to go based on momentum. And termination conditions told you exactly where the market was likely to stop. And look how it's consistent. 3 charts across. Use those fibs. No reason to hope. And then the only thing I can say is that you could have done 10 ticks better on your entry, which would have given you virtually no risk. And on how much is a tick in gold? 10 bucks? So 10 ticks, which is $100 times a 10 lot, that's $1,000 worth of profit. And that's $1,000 worth of risk that you wouldn't have had to put on that trade. Does that make sense? That's okay. You traded with all the advantages. But now we just get better on that. And you marked yes again, but you're not trading from it. Great trade, Thala. And great exit. Way to take advantage and use Fibonacci for how it's intended. Recognizing where the market is likely to go and then taking advantages there. All right, so let's see what happened over here. Pulls back, tests support, comes right back into the mid-band. No odds favorable, no odds favorable. Yeah, I like it. A little bit of patience. That was your entry. It comes back and tests. If you took the stab back to the small triggers where everything lines up at the mid-band, it goes from 18 to 19.4. Do you see it, Thala? When everything agrees, there's your stab back right to it. 3 divergences has you manage out. Eventually, it's all going to line up, guys. It's all going to be on the exact same page. And when it is, that's where the magic happens. And then Thala, your small chart, said we're going to fight one more time. And it does. Pushes all the way down. Nothing's working out. And then your patience got you in here and got you paid right up to the next area. All the way to support. Large triggers don't follow. Not looking for a short trade. Looking to close the gap. Smalls get above the large. Everything says up here. And I'd be curious to see if there was a 2024 entry. What's it look like at 2024 with odds favorable and no termination conditions? Did you get an entry there? Because on the 13.2, that looks like a rules-based long, doesn't it? If I circle that tail. Guys, that's our first hour. First hour, I love to talk about rules. First hour, we talk about termination conditions, right? We talk about odds favorable momentum. Here's that gap theory once again. How many lessons can we get in one? Price reaches support. Absolutely no trigger lines break through. Price comes back to the mid-band and resistance. The large triggers remain more than a full bar away. Gap theory says don't go long in the center here. When it retests those triggers, 3 divergences in the same location, eventually everything goes up. That's all your lessons in one picture, guys. Pretty cool. I'm going to take a couple minutes. I'm going to rest my voice for just a second. Go drink some water, maybe a little piece of watermelon. If your rules are met while I'm on break, post a picture in the room, guys. Let's talk about what you're doing. But I think more importantly, if your rules aren't met, open up your 13.2, take a picture and tell me what you see. And I think that this is an underutilized tool for helping you understand how to read your indicators. Termination, termination because of gap theory, areas break, opportunity for short, termination, termination because of gap theory, 3 divergences, full reversal. This area either has to hold or break. Guys, you can go through and just start reinforcing rules, right? Start reinforcing what you see. This is what I see with no pressure of a trade. This is what I see with no anxiety, with no sweaty palms. Annotate the hell out of it, guys. Use that call out all over the place. Create amazing chart reading. I don't know. Stephen, did you write your rules on the chart? Strong triggers. No termination. Area for entry inside of favorable large triggers. What do you think, Steve? All right. You're too slow typing? Well, I'll tell you what, then you give me the Y or the N in the room. Did you have a termination condition that creates a full reversal? Yes, you did. Termination creates a full reversal. So where's our checklist? So there's your first Y. This isn't a trade, but this is what happened leading up to your trade, right? Termination condition creates a full reversal. If I look at the checklist, that lets me know that the market's coming from a strong bottom, from a good bottom. Does that make sense? Where am I coming from? Coming from a rock star bottom here. Did you have odds favorable momentum? That's not the trade. That's the same trade. Right here, right? This is your whole picture, Stephen, right? Let me make your whole picture my whole picture. And then let me put a checklist on here. Is the market coming from a good top or bottom? So that starts on your 13.2. Was there a termination condition that creates the full reversal? Absolutely there was. This isn't the trade, right? But this is the condition prior to the trade. That's the first yes on a checklist. Odds favorable momentum? Absolutely. No termination conditions on a 13.2? Absolutely. Area for entry inside of favorable large triggers on a 5.1? Absolutely. So Stephen, what do you think? Was this 20 to 30%? Was this just a cost of doing business? Do you see how using the checklist, you can answer your own question, right? And this is kind of the next step for you guys. Let me answer the questions. Let me help you with things. I see it. It happened right there, right, Stephen? Right here. No matter where this trade took place, no matter what the timestamp is, isn't the first item on your checklist, is the market coming from a good top or bottom? It's on your 13.2. Support, no trigger lines break through. Large triggers go from red to green. You end up with odds favorable momentum. Do you see it? Well, sometimes the market takes a minute to move, doesn't it? I see what we're saying. All right, Stephen, this happened at 7 p.m. yesterday. Is this a termination condition that creates a full reversal? Absolutely. Check it out. It did odds favorable momentum, and it actually gave a great looking trend trade long. 9 hours later. Sometimes the market moves slow. So what happens right before your trade, right? This is a termination condition that creates a full reversal that gives odds favorable momentum. The timestamp between these two is about 30 minutes. 3 divergences in the same location is a termination condition. Termination condition creates odds favorable momentum. Odds favorable momentum. I'm running synthetics. I had my 5-1 fib there. So I'm respecting the 5-1 fib, and I'm not looking for that long, because now we're at a termination condition that creates a full reversal. So when we're talking about that order of operations, it's okay that it's 10 minutes earlier. It's still what got that long movement headed in the direction. Does that make sense, Stephen? Even 10 minutes earlier, that's what got that market moving up. And when it came to that resistance, absolutely to the tick, and this is where I think synthetics are helpful, is you could identify this area on the 13.2. It creates that termination condition, and it just gives that reaction that pushes it back. But if you were in at 52.75, it only dropped 8 ticks before it came up and retested that area. And then that second divergence with weak triggers lets you know that it's likely to hold. Does that make sense? This is one of those ones, if your initial stop is 12 ticks, it kept you in the trade to retest the area. But your stop is outside the window of opportunity. So this is where maybe using that 8 range helps out a little bit. Wait for a market flow signal if you're trading directly into resistance with divergence and absolutely no trigger lines breaking through. I think it's a great looking trade. And with the setup that you have, it certainly puts all the advantages in your favor. Did that make sense though? Because I think the biggest lesson there is you were in fact coming from that great termination condition that creates a full reversal. And that's what kind of set up the trade, even though it's 10 minutes earlier. So now we have resistance holds, pushes all the way back to support. Large triggers don't follow. There's our gap theory. You guys want to see how much patterns repeat themselves? Resistance all the way to support. Trigger lines don't follow. Resistance all the way to support. Trigger lines don't follow. Everything we do is patterns, guys. And now we're in a holding pattern. If 58 breaks, if I get odds favorable momentum, we'll continue looking for longs. If 49 breaks, I get odds favorable momentum, I'll begin looking for shorts. In the moment, I'm going to let the people that control the market do what they're doing here. But guys, I'm going to take just a minute. That was a great lesson, Stephen. Thank you for posting that picture. And I hope everybody's getting something out of this, not just Stephen, right? You should be listening in if you're learning the software. Take lessons from everybody, because there's a lot of lessons happening in the market right now. I'll be back in a few minutes. When I get back, we will start looking at more charts, read our indicators, and keep moving forward like we do, guys. I'll be back in just a second. All right, guys, I am back. Mike W., there's not a financial calendar in Discord that I know of. But here is a link to forexfactory.com. Excuse me. Oh, yeah, and Safia gave it to you as well. Cool. I guess I should read all the way down. Safia, let's see what you did, and thank you for sharing that in class. Safia says, termination condition. Perfect entry creates a manageable trade. Boom, boom. So Safia, nice trade, medium probability, right? Because we're trading into this fib. Awesome, Mike. But because of the direction, because of the momentum, because of the termination condition, because great entries create manageable trades, you recognize the trouble spot and you were out before you ever got there. So let's talk 8 range. What did the 8 range tell you? No reversal bars coming off the area, right? But you had odds favorable momentum. You had your area across the board. It's inside of favorable large triggers. I think the biggest key on this one is there's no divergence. There's no stranded buyers, right? And there's odds favorable momentum. It just kind of fueled the advantage a little bit. Great entry. And this isn't a hope trade, right? This isn't a home run trade. This is a let's get paid on the way back to that trouble spot. Great job, Safia. Beautiful execution on this one. But do you see how it becomes easier to take a medium probability trade with odds favorable momentum? If I'm going to sacrifice into an area and you didn't go back, you didn't try it again, nice job. But if I'm going to trade into a big red line, I'm going to make sure that I've got a market that's absolutely screaming, and it is on every market. Great job. All right, Steven, you thought all the rules were met? We talked about this one. That's the exact same trade, isn't it? Steven, didn't we talk about this trade already? I want to make sure. No, I didn't. I said they were met just fine. Absolutely. With the setup that you have. I don't have the picture. There you go. We even went through the checklist, Stephen. 100%. The only thing that I said that you probably could have done is run your synthetics. Know where these areas are on your 5-1. You'll notice on Safia's picture. Those fibs are coming over. So one of the things that happens on your 13-2 is the 13-2 runs with the native 13-2 fibs, which will extend all the way to the right. And then there's synthetic fibs. You'll be able to recognize key areas on the 21, and the skinny ones become the 5-1 fibs. So there's our skinny one, that 5-1 fib. But even without the synthetics on there, Stephen, one thing that if you get to this key area, and I don't look for terminations, but it should be printed here. You are running synthetics on the 5-1. right-click on your 13.2 and go to Data Series. And click that tick replay. And it's going to come through and reload. And it's going to give you those synthetics. Without that fib there, Stephen, absolutely 100% beautiful, perfect execution. But if you had known that that fib was there, it might have changed the story for you a little bit. That crashes you. Then watch this. Let me show you a different trick. And we'll go back to your trade. On your 5-1, Stephen, I want you to take a horizontal line, F6. And now it's on my 13.2. How easy is that? And it doesn't even have to be red, right? You could make it snow white. Because you know, watch this, now you have the area here. I can do another one down here. But now you can create this awareness with a simple line. You know it's resistance because the market's trading up to it. You know it's support because the market's trading down to it. So what this will do, Stephen, is this will help you identify these areas a little bit. Your chat box is blocking half of your picture. Are you in extended mode? Are you in full screen mode, Stephen? Because your chat box, even with the chat box, I can still see the full picture. Right here is your full screen button. Click full screen. And maybe that'll help a little bit. But you should still be able to see everything that I'm doing in the picture to the right. Take a picture of your chat box. Let me see what it looks like. Maybe I can help you. But you see how you can just draw a line and that'll help you a little bit? That's weird. Okay, so do this, Stephen. Are you ready? Down here, there's going to be a go to full screen. So let me show you. If I pull up Discord, so what you've done so far, and this is good, is you've probably come here and gone to the education page, right? Whoops. And mine's already running. So once you go to the education page and you click on that education page, it's going to pop up and it's going to look exactly like you have it looking. So the next thing for you to do is in the bottom right-hand corner, there is a button right here that says pop out. So if you click pop out, it's going to give you your own box away from Discord, which means that you're not going to have all of that stuff on the left side from Discord, which is going to make it easier. And then in the upper right-hand corner, there's going to be the chat box right up here somewhere. And it'll put that chat box on the side with the screen in full view. Did that make sense? I hope. And that should help resize it a little bit, make it easier to see some stuff. No worries. So close it out, Stephen, and then enter from the Discord page. And then once you enter from the Discord page, let me see if I can do this. You should be able to see this side of my screen. So let me make it small over here. Up, see how that's overlapping everything? If I make it bigger up top, it shows everything. That may be what you're doing. You may be in a micro window there. I'm going to figure this out though. I want you to be able to see what we're doing. So in the upper right-hand corner above your chat box, Stephen, click the square so that it goes full size. Right now you're in a minimized window. That should be all it takes. But I like going to the pop-out so that all of that left side stuff is gone. And then let me know if you need help. And then guys, termination condition, right? Price reaches support. None of the trigger lines have made it through. And then as we come to crude oil, there's that termination, creating a full reversal. Was there an opportunity in crude right here, guys? Smalls below the large, larger wide, angled down. Looks like it came right back to a mid-band inside of favorable large triggers. Not your best trade? Hey, Steven, get with Jason in tech and let him get on your computer and walk you through it real quick. Or if you want, Steven, reach out to me on Skype. I'll be happy to jump in and help you out. Or your salesperson can do it. I think education is very important. So I want to make sure that you're getting anything and everything that you need out of it. And I'd be happy to hop on your computer. We can do it through Skype real quick, and we'll just go through the process together and hopefully get you squared away. And I bet Cameron's typing a link to how to do it too. There you go. Thank you, Cameron. All right, Safia. Calling it a 50-50. No worries. Did you see Cameron's message above you? Close the chat part of the room. That'll move it to the side so you can see the full screen or pop-out options. Thank you, Cameron. All right, so Safia, why do you think your entry was early? I'm just curious. Did you have odds favorable? Kind of, maybe. It's iffy at best. Those smalls are working their way back inside, right? And they didn't really get through, and the large didn't get through, so there's really not any momentum there to help this area break. And then look at your 5-1. Here's your large and here's your synthetics, right? Your area, Safia, what's this? And how does it fit into your rules? If I'm not mistaken, those are small triggers from a 13 range chart. I'm not sure you need those. But I think the key here is you don't have odds favorable momentum going directly into a termination condition. And it creates a reaction. It creates a bounce. So it's not that it's an early entry. You're actually late because your only areas inside of favorable large triggers are all the way down here. Does that make sense? This is outside of your favorable large triggers. I'm not sure having this on there is advantageous compared to your rules right now. No worries. I think you've just got the wrong template on there. If you right click and go to templates and load, let's make sure that you have the 5.1 Dynamic Rinko Bar 2023. I think what you have is the 5.1 Rinko 13.2 large 13 range small triggers with tick replay. You don't need those 13 range. I think you want this one right here, Dynamic with 13 tick replay Rinko Bar. Cool. You're so welcome. Dave, goals for the day? Nice job. "50-50 momentum." That one doesn't work out so well. Then quick little bite. Gap theory pulls you back. It breaks. Quick little bite. All the way down to the trouble spot. Creates a reversal. Odds favorable. Another quick bite. David, great trading. Great trading. Once you figure out what feels good, guys, once you figure out what your brain clicks with, it all tends to work out, doesn't it? And now it's just consistency. Weeding out the bad, building off of the good. Everything that we talk about in this room, guys, is high probability initially. That's it. Price reaches resistance, no trigger lines break through. This becomes a lower probability trade, right? If you're going to take this trade, great entries make it manageable, but you don't have a clear path. Does that make sense to everybody? This is a pivot stop out at resistance, and none of the trigger lines have broken through. If you take this entry, this is not a home run trade. That's a trade that has to be managed assertively. And then look at the scramble down here. The larger below, but the smaller above the large. And now things are starting to break through the areas, small and larger below. But we're looking for that odds favorable momentum. We're looking for something to tell us that the market's likely to continue. Checklists are a wonderful thing. Has everybody done this? Do you guys have a plan? We're coming into the last hour, guys. I'm going to focus more on you than we are on rules. Does everybody have a plan? Has everybody written down, this is what it's going to take to get me into a trade? I had a gentleman tell me once, a very successful trader tell me once, if you don't have a plan written down, you don't have a plan. And if you don't have a plan, how are you going to know what you're going to do, guys? How are you going to know what it's going to take to pull the trigger? How are you going to know what it's going to take to get you out of that trade? So use this example, guys. This is super simple. This is your first 20 days. And all the top side of this does is it focuses on entries, making sure that you can get in at the absolute best place with the most advantages, with everything in the direction of the trade. All triggers agree, right? And then start taking those pictures over and over. These are what my best entry looks like. There's 142 pictures on my spreadsheet of the best entries. Guys, I'm going to share that with you. Steal it. And if you haven't done it yet, go through it tonight. Take a look at every one of these pictures. Define your entries, nail your entries. Great entries make manageable trades. Can't stress that enough. Great entries make manageable trades. And that's your first bite of the elephant, guys. Learning to day trade's like eating an elephant. The only way to do it without it becoming overwhelming is to do it one bite at a time. Work on your entries. Get the best entry. and then work on a management plan. Define your management plan. Initially, a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. Guys, this was put together. John and I woke up Sunday morning, drank too much coffee, and created this document. If you trade 2 contracts, your initial stop will be 12 ticks, right? Put in that ATM strategy, but it'll be adjusted above or below the window of opportunity to that point where the market shouldn't go. It'll be adjusted below that window of opportunity. The stop will be moved 2 ticks above or below a reversal bar in the direction of the trade. So your initial stop's in place, and your only option, guys, keep the emotion out of it. You either get stopped out or you get a reversal bar. If you get a reversal bar, you're going to minimize risk. There is no opinion, right? There's no I hope, I want, I wish. It's simply very pragmatic. If I get a reversal bar, I'll reduce my risk. Now there's nothing to do. I'm either going to get stopped out of this trade or my first target gets hit. Guys, you have to accept the fact that you're going to get stopped out of trades. Your profit targets will be $100 and $200. When your first profit target is reached, you'll move your stop to break even, guys. Mechanical. Not if you get an uptick against you. Not if you hear in the room Mark Novak say this is likely to go the other direction, guys. If your first profit target is hit, go to break even. And now you're not going to move your stop again, ever. Either your second target gets hit for $200 or you're out break even. But you have $100 in the bank that they can't take from you. What does that do, guys? Winners create dopamine kicks. Dopamine kicks get you excited. They get you feeling confident. And honestly, they make it easier to hold for that second target. And your second target's going to be $200. And guys, if your second target is hit, you just made $300, right? In a simple, pragmatic, no stress, no emotion, stops where the market shouldn't go. Stop gets moved above the reversal bar. Stop gets moved break even after the first target's hit, guys. On 2 contracts, with all the conditions met, that high probability trend trade, it becomes pretty easy to hit that first target. And it becomes easy to hold for that second target when you already have money in the bank and nothing to lose. So guys, keep it pragmatic, keep it focused, and allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry and a 100-200 automated exit. And then you can adjust things on your experience later. Does that make sense to everybody? Because once you get that great entry, you're going to learn to manage. Every picture of a great entry creates a management opportunity for a trade. So go back and look. Rockstar entry at resistance inside of favorable large triggers. Everything says down. And now I can grow from that. My small's below the large and the large down with absolutely nothing in the way says hold for the bigger target on that second contract. That's a management opportunity created from a rules-based trade. Perfect entries, I can go back and I can analyze. Well, shoot dang. I didn't have to take 5 points to divergence. I could have taken 10 points all the way to support. Guys, this is how management plans grow. Let them be based off of the great entry. And then once you take the great entry, take those pictures, annotate those charts, and get in. This one says not scared of one divergence. What does that mean? Let the 13-2 lead the way. When everything says go with nothing in the way, one little divergence isn't going to scare me out of a trade. That's all this was. Easy lesson. Guys, what do you want to talk about? We're in that last hour. What's the market doing? Man, I open a lot of stuff, don't I? Oh my goodness, termination condition. Look what happened. How cool is that? Here's a 50-50, right? 1, 2, 3 divergences. Guys, this might break. That 5-1 is telling you to watch out. We're losing momentum. And look at it again, guys. Termination condition. I'm going to take a second. Ready? This is the closest thing to a sales pitch you'll ever get out of me. Termination conditions. Guys, you know exactly where the market is likely to go. You have an advantage that most users don't have. You've got these amazing blue and red lines, and you know exactly where the people that move the market are going to react. You have a very clear set of rules that has been back tested and forward tested that provide a statistical advantage that wins more than it loses when you follow the rules. And that's been handed to you as well. So now you have the best software on the planet. I firmly believe that. And you have a set of rules to help you build a foundation to learn how to trade it. You have clear rules that tell you when you've lost the advantage of a clear path. You have clear rules defining odds favorable momentum. And you have unbelievable clear rules where you can pinpoint where the market's likely to continue. Gary, small's below the large, larger there. You take the short with market flow. All right. Nice trade, Gary. Good job following your rules. And it worked out for you. And I'll be darned, odds favorable momentum led the way again. Things to notice on Gary's entry. Small triggers were still outside of the large triggers. Still had an area inside of favorable large triggers. When that third divergence printed, he could have made a decision, either exit, because we're in an area that hasn't broken, take quick profits at that lower area, get to break even, and let's see if that momentum carries it to the next area. Gary, great trade. Perfect execution. And then Safia, do you see how he waited for confirmation? He knew that the rules were met. He knew where it was going to be met, but because of the challenges, odds favorable 50-50, right? He's had a couple slowdowns. So he knows on the 5-1 that it's not perfect, but the odds are still pretty favorable that this market's continuing down. Everything says the market's continuing down. So Gary uses the 8-range chart. Notice that he has odds favorable momentum. That's the first confirmation on the 8-range chart. The second confirmation is he literally gets a short signal off of a reversal bar from the area where the market is likely to continue, and that confirmation costs him about 6 ticks, 5 ticks. He identified his trouble spot. 3.5. It's still a $200 trade on a 4 lot or on a 3 lot. I'm not sure. Gary, the one thing that I can say about the exit, though, is let's look at it. This is something that I think new users miss out on. If you were going to exit, third divergence with the small triggers inside, that was your exit, right? Get the hell out there for break even. But by the time that third divergence has done exactly what it's supposed to do, and we're coming back into that trouble spot, do you notice how your small triggers are down, your large triggers are down, your synthetics are down? Everything says down here, and this is still cranking down. So I think that if you're gonna manage these trades, the small chart allows you to manage, right? The small chart gives you what you need to know. For me, and this is just me, 3 divergences on a 50-50 trade with the small triggers inside, that's enough to get me the hell out of the trade. That's just me. But if you hold through that, if you go, you know what, I believe in it, then at this point, your small triggers are just changing momentum to the downside and creating advantages rather than taking away advantages. Does that make sense, Gary? I like this is your target, 30-15. And if you decide you're going to hold through that third divergence, well, then your stop is still up here, right? And you got to let it do what it's going to do. I love a couple contracts off at the trouble spot. And then if you go break even, that confirmation, you're out break even on this third one. But the 2 points that you made extra here really kind of takes that one up. I think it's great execution. I think that there were little opportunity for management just because at the time of your exit, everything agreed to the downside. And then right here, guys, if you were waiting for things to clear, great potential entry right there to get you down to that next area of support. You ask questions, Thala. That's the easiest way. Let me tell you what I told someone this morning. I think the easiest way to learn the 8 range chart, and Gary, I'm going to use your picture. That's it. I think you missed some then, but that's okay. The easiest way, in my opinion, Thala, in my opinion, is worth exactly what you pay for it, nothing, is to find your rules met. And once your rules are met, go see what happened on an 8 range chart, right? So when this termination condition up here happened, what did the 8 range tell you? When this bounce off of here happened, what did your 8 range tell you? And what you're going to find is you're going to begin to line up a little bit what's happening per your rules, and that's the key. What's happening per your rules, you can begin to see how the market flow reacts at those rules-based spots. And one of the most common ways to use market flow, and John Novak's going to be in here Monday, Thala, Safia. If you guys really want to learn that market flow, pick his brain to death on Monday. Don't you dare be shy. I want you to run him through the ringer. But the most important thing to remember, and Gary said it too, is market flow is a confirmation tool. Market flow does not initiate trades when there are no rules met. So when the trend trade rules are true, it may be a confirmation. Maybe there's divergences on your 5-1. Maybe you don't have the strongest trigger look. And if we look at Gary's trade, Gary, this is perfect timing. If we look at Gary's trade, it's a 50-50, right? And there's a couple divergences. So what a great thing he did is he said, you know what? First, I'll confirm the odds favorable momentum. So that was one more notch in the belt for things looking good to the short side. And then he waited for an actual confirmation signal because the rules were true. So he didn't trade a confirmation signal. What he did is he said, my rules are true, but challenges exist. I'll use it as a confirmation tool. And there's amazing videos. Here's your first one right here. That gets them behind. And then if you scroll down a little bit, Here's your volume analysis video right at the bottom of the volume analysis trade. But the reality is what you're doing is you're looking for signals when things aren't perfect. Strong triggers down. You're looking for a trend trade. Divergence is printing. It's not the best look. So I'm going to wait for confirmation on the market flow chart to get me into this trade. And the cool thing is if there's no signal, then there's just no trade, right? Divergence prints, you know where your areas are. No signal, no trade. So it becomes a confirmation tool. Does that make sense, Thala, Safia? And you'll use it as well. Here's a reversal bar followed by a white bar. This says, man, careful. And you'll learn these patterns as you grow with the software, as you grow with the 8-range chart. So between the divergence here and this little bit of information here, you're just going to say, you know what, I'm losing some advantages. I'll wait for a signal. And you never get a signal from the area. This reversal bar happens way down here beyond that window of opportunity. This doesn't mean anything. Strong triggers, right? 50-50 trade. Guys, I used to teach the 101 class with this picture right here, back when there was an afternoon 101 class. That's a great place to go short, isn't it? I don't. Thala, the first hour of this class is exactly what I taught in the one. It's 101, not one-on-one. I rarely do private sessions, guys, because the reality is you've got 15 hours of private sessions right here in this classroom. And when people ask me for private sessions, they think that one phone call with me for 45 minutes is going to fix. I don't know. I don't have any. On this picture, Safia? Or in the live market? Let's look at it. So it all starts with the 13.2, right? 13.2 says strong, looking to break. 13.2 says it's already broken, right? Safia, do you have strong triggers, no termination conditions, and a pullback to resistance inside? Right here? Are you sure? Looks like the large broke. The smalls are below. We didn't reach support. No divergence. Pulls right back to resistance inside of favorable large triggers. Am I reading this wrong? This would be an instance where I don't need market flow confirmation, right? The rules are met. Pretty good. What's it tell me over here? Nothing that I can use, other than it confirms momentum. Market pulls down. See how we're starting to lose momentum a little bit? Starting to lose that momentum, but I have a clear path. I have no divergence here. If you're saying, I really want to get in at 27, 27 should hold without a doubt. I like this look anyway because everything says down, but you're like, I want a little confirmation. Do you see how you get market flow confirmation right there? But you're not getting short until all the way down here at 24. Does that give you enough room to the potential termination condition? But it all starts with the 13.2. Are the rules met? If the rules are met, you don't need confirmation. But if the rules met and there's a potential problem, that's when you start looking for that confirmation. Does that make sense? So this one, you should have been short and paid, right? This one, because your areas are a little bit beyond the large triggers, you could have used a little confirmation there. See the difference? If the rules are met, take the trade. But if the rules are met with a challenge, wait for confirmation. And then when we come back to this one, it's the same thing. The rules are met, right? Odds favorable, but we're not quite through. What does divergence mean? Did I take a picture of this? I think I did. No worries, you're doing great. What does divergence mean, guys? It means a loss of momentum, doesn't it? That's all. And then, Safia, there's that pattern one more time. A reversal bar followed by a white bar. This is your next market flow lesson. I'm looking for a short. I've got a window of opportunity, but I notice that this stupid yellow white bar paints again. I'm going to wait for confirmation because I have a loss of momentum. It's a 50-50 trade, and I've got this combination. I'm just going to wait for confirmation. No confirmation, no trade. It keeps me from being run over. So let's see if we can find. Safia, will you do me a favor? Will you take a picture on your ES? What happened here at 21 when we reached support, divergence prints? Will you take a picture and show me what the 8 range is doing there? I don't have an 8 range. Absolutely. The rules aren't met, but let's see if there's any information on the 8 range to confirm whether or not this was a good bottom. And Safia, all those pictures that I just showed, I can post it in Classroom, but each and every one of these pictures is right there in the market flow section, right? On the volume analysis. So let me give you the link to that section and really dig into it. You're so welcome. And just taking a look here. Definite termination condition. We got divergence, right? And 1, 2, 3 up bars. It's not that yellow-white pattern, but now it's that second divergence. The small triggers are inside. Termination, termination. But if you were going to be a Yahoo and try to go short from 25, you never got confirmation. But the rules aren't met, right? Same thing. Rules aren't met. So, Gary, you're killing it with the pictures today. I love this. 13.2 says don't go short. Is everybody comfortable with that? Rule number 2 not met? No areas inside of favorable large triggers? But I got a market flow signal, guys. Shouldn't I have gone short? It was red, and market flow said go short. Isn't this a trade? Trick question, guys. Hell no. Termination conditions. And Safia Thala, this is what gets new users in trouble with market flow, is taking a signal when the rules aren't met because you think that this is somehow a magical chart. It's not. It's a confirmation tool. Perfect, Thala. Only 2 scenarios, right? Rules met, rules not met. If the rules are met and there's considerable challenges, you can use it as a confirmation. So if I was looking, rules were met here, right? Clear path, pullback, everything. If I was looking for this trade, well, there's a confirmation that I could use to get me right to that trouble area. But once I have a termination condition, this isn't confirmation. This just happens to be a bar with a pink arrow over it. Does that make sense, the differences between the two? If you commit to letting your rules be met, 8 range is an amazing chart for confirmation. But if you try to only change the 8, trade the 8 range, Gary shared my favorite picture. Gary, I'm going to send you a nickel for helping me with class today. Don't stare at the 8 range. Seriously, don't stare at the market flow chart. Trying to figure out, unless your Renko bars are telling you to take a trade, guys, you're just going to confuse the hell out of yourself. Termination condition for the win, right? Did anybody go short hoping termination condition would break? You guys ever seen a market working its way into a range? Resistance to the mid-band. Large triggers don't follow. Resistance to support, to resistance, to support, to resistance, to support. Guys, nobody likes to admit this because it means that you're not doing anything if you're a rules-based trader. We have identified between 35 and 88. And that's a pretty big range, guys. That's 53 ticks. That's $500 worth of movement. But if you're trading into the top of the range or into the bottom of the range, you're in trouble. One thing market flow can do for you here is help you find opportunities at the edges later. This is a range-bound market. Does anyone have market flow on crude oil? I should just build one, right? Let me build one. Give me 1 second to build an 8-range chart, guys. Whoops, I forgot to apply a template. Give me 1 second. All right, so let's look at patterns in this range. So at right around 10 a.m., we got right about here, 82.75. Let me make sure that I can see price too. Let's just see if market flow gives us any information. So guys, at the first hit, I believe this was our first one, around 942. Reversal bar, down bar, white bar, reversal bar, a bunch of down bars coming from this area of resistance. And sure enough, it pushes all the way down to the mid-band, all the way down to the mid-band. Nothing to do in here, right? Rules not met. As we're coming up to this 50-50 trade, smalls above, large below, first you get a reversal bar from outside of your outer band. And then here, look at this. Divergence prints with a stranded buyer. It means the buyers pushed as hard as they could. The highest concentration of buying power was at the very top of the bar, and it still ended up with a down bar with divergence. Guys, this is a challenge on a 50-50. If you waited for confirmation, you got it, but it was over quick. And then as it pulls all the way down to support, here's a reversal bar straight from support, right? Nothing to do here, terminations. Pulls all the way up to the high volume area at resistance. I go back and I study these. What are they telling me in the meantime? And then the market starts to come down. And here's your first opportunity. Termination, full reversal, odds favorable. No need for confirmation, but if you were waiting for it, there is one of the confirmation signals right here at the circle. And that market goes all the way down to the area of support, which coincides with the outer band here. 1, 2, 3, 4, 5 up bars from a termination condition. It pushes all the way up to the pivot stop out, which also coincides right at the outer band. So I'm not picking trades on my 8 range. I'm looking for advantages on my smaller charts, on my 13.2, on my 5.1. I'm looking for rules to be met, and then I'm just using it as a confirmation tool to help me get into what may be a little bit of a challenging trade. Termination to termination to termination. So if you're looking to trade edges, right, Gary? Every day, Stephen. Monday through Friday from 9 to noon. Are you asking about like an in-person live training seminar? Because in the past, they've done a lot of those. John's had a lot of seminars. Thanks to the internet, it's the same information, but you don't have to buy a plane ticket or a hotel. I keep telling them we should do a live seminar on Saturday and then have a golf scramble on Sunday. I think that would be fun. But I like to ask people, termination, HVA, right? I like to ask people, though, what are you going to get from seeing my ugly mug that you don't get from hearing my Yahoo voice? Yeah, no, I love to meet people face to face, Stephen. I absolutely love it. And I'm 100% for a seminar. But what you come up with a seminar is remember that there's a cost associated with renting out a hotel lobby. There's a cost associated with all the things that we do. And I'm all for it, guys. I'll take your money in a heartbeat. But it'll be the same information that you get here, right? It'll be the same information that's available here. But if you guys want to do a seminar and a golf scramble, I'm in. Let's do it in Sarasota so John doesn't feel like he has to get outside of his bubble. We'll spend a day. You guys all bring your laptops. Everybody brings 20 pictures. We'll put them up on a big screen, and we'll look at annotated charts, right? We'll do the same thing that we do in this classroom, but you'll get to see that I definitely have a face for radio. I'll tell you what, guys, let me work on John Novak. Let me see if we can make something like this happen. I can tell you historically, and this was 15, 20 years ago, the price tag on something like that was typically around $2,000. Because that covered the cost for the hotel. That covered the cost for a full day of John Novak's time. That covered the cost for a lot of things. I don't know what it would be, but that's what it was historically. I believe it was somewhere in that range. But I'll tell you, it's pretty cool when you get to meet John Novak in person. He is an enormous personality. He can't sing to save his life, but he's the kind of guy that runs the room from karaoke. It's just pretty amazing. Mike, you've been to one? I was at one in the Woodlands, Texas, probably 15 years ago. And it's amazing meeting you guys. And I've had the pleasure of meeting quite a few Nexgen users just on my travels, bumping into people. I got to meet someone out at the races in Austin. I got to meet a gentleman in Dallas. And I can tell you that it's pretty cool when you sit down and talk to somebody that's doing what you're doing, that's done what you've done. Because if nothing else, it kind of validates the road that you're on. And it's nice to know that, honestly, everybody's kind of doing exactly what you're doing. So I'd love to do it. I've told him that I would do it. I told him he doesn't have to run it. I would be more than happy to run the whole seminar. That range is still holding, isn't it? And Stephen, we'll see if we can make that option happen for you. I'd love to do it. I think that it would be a blast. What do we think, guys? Termination condition creates odds favorable momentum. Smalls above the large are wide. They're angled in the direction of the trend. Smalls are above the large. Hopefully drawing on this doesn't crash it. In the moment without a reversal bar, this is your window of opportunity, isn't it? Give me a Y if you see it. Miel, it depends. Mike W., thanks for being here. So the The S&P changes every quarter. And it's typically, I want to say it's the 7th or the 17th of each month. It is, the U.S. indexes typically roll, maybe, yeah, it's the 17th, I believe. So we just rolled last month. We're in the March contract. Our next roll, February, March, April, I believe is in April or May 2023. So we'll go from March to June, and we'll do that right around June 12th. And then, yeah, and they will, guys, in your NinjaTrader portal, they'll talk to you about it. Yeah, but Miel, one thing I can promise you is that when it's time to roll, we'll talk about it in class. We'll do it with crude oil and the S&P. And John will actually, on the resources page, he'll download brand new workspaces with the new contracts on there. So we'll do a lot to keep you in the loop, but the CME will let you know exactly where. Gary, termination, odds favorable. You're at the top of the window of opportunity. Just waiting patiently. What a great pre-trade picture. And then what happened from that picture to now? That window of opportunity has changed a little bit, hasn't it? It went from being, oh, nope, it's still pretty big. So Safia, this may be an instance where you say, I've got a huge window of opportunity. I'll wait for market flow confirmation. But I've got a termination, 50-50, right? Area's not broken, but it might be. No divergence, strong triggers. 3140 is the top. 27 and change is the bottom. That's a pretty big window. I don't know what's going to happen. That's a pretty big rundown, isn't it? What's your 8 range look like now? What did it tell you with this pivot? I don't have an 8 range, guys. Did Gary's have it in there? Everything says up on that 8 range. We can confirm odds favorable momentum. It certainly is a big window on a medium probability trade. So now we're just taking the information, right? And we're just looking at it. It's just a red bar, which makes sense, right? No divergence on it. I like that. So I'm not seeing a slowdown on the 8 range. I do have odds favorable momentum. I do have odds favorable momentum. And I've got a window of opportunity here. The only thing that I have to be prepared for is if I get in at the top, am I willing to put my stop all the way down here at 26? That's up to you. Let's see what it does. Let's see. Am I on simulator? I am on simulator. So what if I put an order at the top of that window? Nope. Stephen, I'm looking for termination conditions on the 13-2. So on the 13-2, I'm good. But on the 8 range, it never got there, right? So the real lesson, and that's actually, Stephen, thank you. That's a great question. And it goes back to how do we determine a termination condition? Say that 3 times fast. 2 things have to happen, right? The first thing that has to happen is price reaches the area. And if price doesn't reach the area, well, then it's not even coming into play. So, Stephen, since 41.35 hasn't been reached yet, it can't be a termination condition. Does that make sense? But then what's the flip side of that? Is if an entry is taken, can't this red fib that lines up on every chart be a great profit target? So if price hasn't reached it yet, and this is cool because a lot of people go, man, but Mark, we're only like 3 points. It's not that far. Remember that we're gauging the distance from the area of entry. That was a great question, Stephen. Thank you. And then I love this one too. Pardon my French on this one, but who said, oh shit, it's going without me and jumped in? Anybody? Almost. This is why we trade rules, guys. Because what did you do if you watch ticks instead of... No, not at all. Because if you get in there, doesn't my stop still have to be all the way down here? Isn't my target, we'll use this one, still up here? So I got squat for profit potential and the king's ransom on risk. And this is a development in trust, right? This is a development in seeing this happen so many times that you're comfortable. That you're comfortable with where it's likely to continue from, right? You're comfortable with the advantages that get you into a trade. You're comfortable with the patterns that you recognize instantaneously. Does that make sense, guys? We're watching this happen live. What does the 13.2 say in regards of strength? Boatload, right? Tons of strength to the upside. We're not talking areas, we're just talking strength right now. Can we agree that this is a metric crap ton of momentum to the upside? Look at the look on this, guys. Everything about this says this market's going up, doesn't it? What's our one issue? An area of resistance that hasn't quite broken, but I'm coming from a termination condition which adds strength to the 50-50, doesn't it? And if you're at the top of the window after a termination condition and this much strength, Safia, I hope you got ordered. Yeah, I hope you got in. Missed you by a tick. And then we'll use Fibonacci. Where's it going? So what if divergence prints right here? If it missed you by a tick, is it over completely? Or do you still have strong triggers? Do you still have a termination condition that creates a full reversal? Do you still have all this? Guys, when there's an area, you'll see the reaction on the 5-1. If divergence prints, when divergence prints, it loves to take out the previous pivot, or at least match it. Don't you still have a window of opportunity inside of favorable large triggers? And guys, hasn't it shrunk down to 2 lines at this point? One of the most frustrating things in the world is jumping in right here because you're scared it's going without you, and it comes right back and grabs you. There's no guarantees. But you have to ask yourself, are my rules still met? And if your rules are still met, is there still a trade? Tick or two above the highest point of support. That's it. Tick or two above. But what do the 8 range, or what do the 5-1 triggers say? Strong or weak? Look how far outside they are. Guys, it may not come back for you. But if you were a tick or two above that highest point of support, you probably got in. And nothing has changed. Absolutely nothing has changed since the time of your entry. And honestly, if you're looking for that $300 trade, you've already been paid, you're out, and now you're waiting for the next entry. Now you're saying, man, I hope they come back to that window of opportunity and give me an opportunity to take a rules-based trade, because this momentum suggests that that 41.38.06.05 area needs to be hit. Does that make sense, guys? Just talking through it, right? What do I see? Stephen F., where am I coming from? I'm coming from a termination condition that creates a full reversal, even though it was 30 minutes ago. And then order of operations. I've got amazing momentum. Everything says up, right? Can we agree that everything on every chart agrees for the trade? What if that was your only basis? Because that's the basis for high probability trend trades. That's the basis for those momentum style trades, is agreement. Agreement is good. I love 31.50, Safia. How did it miss you by a tick at 31.50? Did it hit it and not fill? Or did you move it because you got nervous? Because I've done that. This number right here, sometimes it'll hit it and not fill. That happened to me yesterday. I had a 2 lot waiting in an area. Yesterday I took a long trade and I had a 2 lot waiting right here at the area, and it only filled 1. So sometimes you just don't get fills. On the 8 range, what does the number mean? Which number are we talking about? There's so many numbers. Right here? Which number am I looking at on the 8 range? Because they're the exact same things. Oh, there it is. So I got you. I didn't see the yellow arrow at first. So it's a range chart. What does that mean? So just go to the definition. It means that bars will print in an 8-tick range. So what those numbers are showing you is the top of the range and the bottom of the range. If the market reaches 36.75, you'll have an up bar. If it reaches 84.50, you'll have a down bar. And then Safia, there's your market flow confirmation right there. So if you wanted to take this one with confirmation, you would have been in the trade right around 33.50-ish, 33.75. Do you see it? And it worked out great, didn't it? You got in at the HVA line, Jose? All the way down here at 26? $41.32. Which, the HVA line on the 8 range chart? So after confirmation, you put a limit order at that high volume area to see if they'd retest it? Oh, even better. Will you show us a picture? Because that's a great lesson. If you don't mind. And then, Safia, did you get in after confirmation? Or did I read that wrong? But that's a great live lesson on how you can wait for confirmation. And when you got it, it cost you a little bit. Oh, okay. Do you see how you could have, though? That's a great lesson on how confirmation. And I love this. It didn't fill. Well, that's where when you get confirmation, that's the next thing, Safia. I guess we haven't talked about this, have we? So when you get that confirmation, you click buy now. There is no limit order. So when this confirmation bar prints, you're hitting buy market. Boom. You're not waiting for a limit order. That's why there's a cost. Because limit orders, what a great lesson. You ready? A limit order means that I'm waiting for the market to come back to the area, right? A limit order means that I'm waiting for that market to come to me. And I see that all the way here. I'm waiting, I'm waiting, I'm waiting, I'm waiting. And it either fills me or it doesn't. That's how we use the limit order. If you're waiting for market flow confirmation, you can't have a limit order because you're waiting for confirmation, right? You know your areas, you know the conditions, but you're waiting for market flow to tell you, absolutely, Safia, you have a trade, right? You're waiting for that confirmation bar. So when you get the confirmation bar, you can click buy now. Here's the bar. Click buy now. We had confirmation. Your stop goes beneath it. And now you're in the trade. But you can't really use a limit order if you're waiting for confirmation. Does that make sense? Because typically with confirmation, that thing's going. And then Jose had a great example on this one. And I love this. Termination condition creates a full reversal, provides odds favorable, no divergence, window of opportunity. So Safia, this is another way that we can use HVA. See that green line right there? That's that high volume area. There are no stupid questions. This high volume area means that there was a super concentration of buyers in the market. And there was a breakout, and it provides this one. So what Jose did, and Jose, I think this is beautiful. Jose said, I've got everything saying rock star, odds favorable, and rather than waiting for confirmation, I've also got a high volume area to help me out with my entry. And it helped him feel great about taking that entry right at the top of the range, and it gave him a place to do it. Jose, great use of the high volume area on that one. And then if you go to that market flow volume analysis, I believe that there's even a picture, the HVA line, using it when the rules are true to give just one more advantage to taking that longer short trade. So when you buy, how do you stop? So your ATM strategy, Safia, is going to work no matter what. So watch this. If I buy the market, I still have stops and targets in place. And I'm not saying that this is a trade. So I can still go through and manage everything exactly the way I'm supposed to manage it. Stops are there, targets are there, everything's in there. Yeah. So buy now will do that. You can also hit close if you don't want to wait for your targets to get hit. Does that make sense? Dave B., did we clear something up for you there? I love it when that happens, guys, and this is why I love this class. Because that repetition, I learn something every day. I'm like, oh, well, that's pretty cool. Sometimes I'll look at y'all's charts and go, gosh, that's brilliant. I wonder if they realize that. And I'll go back and study patterns that I see you guys taking. Aha moment. Life is full of them, isn't it? Great stuff. Good. Thank you, Safia. What does it mean when an order is filled? Walter, it means that you are in the market, my friend. When you hear that order filled, it means that you went from waiting for a trade to being in the trade. Stephen, on your 8 range, if you click, here's a little video that shows it, but if you click on the bar and then hold down your shift button and roll your mouse, I think I deleted my 8 range chart. I did. Did that make sense, Walter? Here, let me make an 8 range chart real quick, guys. I don't know why I accidentally deleted the old one. Sometimes I just do that. Dress me up. You can't always take me out. True story. Here we go. I got it coming right now, guys. And you do have to have tick data. So here's one right now. There's an 8 range chart. Oh, I'm about to crash Ninja. I can feel it. It's still calculating. Guys, don't mess with your chart if it's calculating. That is a surefire way to get a sporadic shutdown on NinjaTrader 8. Nope, it worked. Okay. So right now, I just have those Renko bars. If I right-click, oops, I need to make sure that's last range data. I'm going to go to templates and make sure I have the right template. 8-2 range chart with market flow. Let me load it. If I want to adjust the look, I just click on the bars, hold down shift and scroll. And Safia, all of you guys that are using market flow, do you see the reversal bar with the stranded sellers right at the area where that trade happened? There's your confirmation. And it cost you 8 ticks. So Safia, when it hit you and didn't fill you, and then you see this bar, you've already got your risk established behind the reversal bar. It's done everything it's supposed to do. Pretty cool, right? It's just one more piece of the puzzle, guys. You're just adding one more thing. But it starts, let me say this in my loudest voice from the top of the mountain. Guys, it starts with understanding your rules. It starts with a foundation of recognition of the advantages, and you're not trading a market flow chart. Market flow chart is confirming what you're seeing on your Renko bar charts. Write that down. Great class today, guys. Thank you for this. All right, I need everybody to send John Novak an email that says, John, I want a seminar and I'm willing to pay $2,000 to be at it. Enough of you guys do that, he'll do a seminar. Thala, all we were talking about was market flow confirmation at the area. If you didn't get filled at the area, market flow gave you one of those confirmation bars. So you had strong triggers, everything set up. We're coming from a termination condition. Maybe you didn't get filled. right? Well, your 8 range gave you a second chance. Your 8 range gave you stranded sellers on an antenna bar directly from the area, an opportunity to get into that trade. But guys, and I'm going to say this, this is the correct entry. This is your entry after market flow confirmation. You pay for confirmation, guys. So make sure that those advantages are present. It doesn't do any good to have confirmation of a crappy trade. I don't typically say crappy, but it doesn't do any good to have confirmation of a trade that doesn't have advantages. Anything can happen triggers, right? But a super clear path, a window of opportunity, another opportunity, right, Safia? I'm giving away the advantage of momentum. If divergence prints, I give it away twice. Maybe I'll wait for a market flow confirmation at that area, and if I don't get the signal, well, then I don't take the trade. That's hypothetically. That's not me telling you what to do. So what does your 8 range say as you come into this trade? The triggers are getting weaker, right? Let me see if I can show this on all charts. I am. $39. Here's the area right there. So let's see if market flow confirmation happens, guys. Fala, are you following? I've given away the advantage of momentum, but I've retained the advantage of a clear path. I don't have momentum as well on the 5-1, but I know where my area inside of favorable large triggers is. You've sent, Stephen? I don't know. What have you sent? Oh, you sent the email to John. I got it. That's awesome. I love it. And if he gives me the okay and doesn't want to do it, you guys can come to the Pacific Northwest. But remember, there has to be return on investment for Nexgen to get that done. So there would have to be a commitment. But I'd love to do it. I love meeting people face to face. I spent 20 years as a bartender. That's one of my favorite things to do. Safia, does that make sense, though, what we've just talked about? Because you're giving away some advantages, it's okay to wait for confirmation at the best area. And that's all this is. And once again, it's not really coming through. And especially, what if we get a pivot stop out beyond the outer bands? Still an area likely to hold. So you just kind of go through that over and over, guys. So those of you that are learning 8 range, every time you take a trade, I want you to see what the 8 range is doing. Every time you see a termination condition, I want you to just take a picture. What's it doing? Present each and every one of those pictures in class, guys. We'll have a conversation about it, and we'll keep growing. We'll go from those basics, from those foundations, and we'll begin to add more and do more. Stephen, were you able to fix your Discord so that you could see everything? I forgot to double check with you on that. Excuse me. Awesome. Perfect. Well, guys, have an amazing afternoon. I'm going to go look for high probability trend trades. See if I can get something done this afternoon. I'll see you tomorrow morning at 9 a.m. If you do market replay, Cameron's amazing. He really is. You know what? I'm going to be in the Woodlands this weekend. I might have to take him out for a beer. I'll see you guys in the morning, 9 a.m., and we'll do it again. You guys take care. Be good.